Welcome on in, everyone, to a Market Open live stream a little earlier today as we prep for the jobs report, which is coming out in about 4 minutes. Big expectations here for the jobs report. We can have markets really react excitedly or pretty poorly to what happens here. And it's going to come down to two things. It's going to come down to wage. We're going to be specifically looking for inflation in that sense. We're looking for how much did wages go up on average month over month. And then, of course, we're going to be looking at that headline number to see what the unemployment rate is. So going to stay 5.2, or we're going to go to 5.1, or we're going to get into the fours. Probably the most ideal case scenario here is just something straight down the middle, something around expectations, around maybe 400 to 600,000 jobs with wage price growth of somewhere around 0.4% or about 4.8% annually. That should not be a surprise to the market. So no surprise, will be anything between 400 to 600K and month over month wage price growth of somewhere around 0.3, 0.4, maybe 0.5. Anything outside of that, and we'll probably have some form of a more extreme reaction. Take a look at the indices right now. You can see the indices are relatively flat. Dow futures up 0.08, S&P futures up 0.11, NASDAQ futures up 0.15. And this is really because the markets are literally just on pins and needles for this jobs report, because we couldn't literally go either way. Just to give you an example, we could end up with a very high beat and high inflation number. We could get, say we got 1 million jobs and the unemployment rate fell to, 4.9%. And the month over month inflationary number was like also 1% or something to that effect. We could have a very fearful reaction by the stock market that, oh no, we're in some kind of overheat or overdrive and the Fed's going to have to act faster, right? Vice versa. I mean, you could get this miss with low inflation, and maybe we'll see we'll see a support longer. So anyway, whatever the result is, it comes out in about 2 minutes. We are again looking for that wage price growth and those headline numbers. We'll look at the categories as well. And where you see the wage price growth, by the way, it's not something that you generally write down as a percentage. I'll just show you really quickly. So when you're in the labor report, this right here is the labor report that came out for August in September. So right now we're going to get September's data, which is unique because the unemployment boost from the federal government ended in September and Delta kind of wore away in September. What we're really going to be looking for here as soon as possible is payroll unemployment rose by whatever number it is. So we'll see a percentage here. And then you just quickly type in average hourly, and then it's going to bring you here. And then you just divide. So whatever your percent increase was, or your cents increase out of what it presently is. So this is really what we're going to be looking for. And we'll see how it goes. It's going to be fun. And you'd have to subtract the cents and then divide, but anyway, we'll just do that. So in the meantime, I'll also we'll probably keep the SPY up in the background just to see how the market's reacting pretty quickly. About 30 seconds to go. And the SPY, pretty tentative here. I actually have tiny little bit of movement to the upside, but I mean, we're really talking pennies right here on the S&P 500. It's really not much going on here. But all right, we are now at the time we should be expecting some sort of result. So let's see what we get. All right, we're at 5:30, and let's see here. Do they already have it? Let's see if they have it.
Boards again. You're going to see the Dow futures up by about 9 points, and things are coming down pretty rapidly. We just have this jobs report. Steve, what do you see?
194.
Whoa,
that's low.
194,000. That is real low.
Got it. I got it. Here it is. Oh, wow. 194. A big miss to the downside. Unemployment rate went to 4.8% somehow. Average hourly rose by 19 cents. So 19. So you have to go 30.8 0.85 minus 19 cents, and then divide these. So 19 divided by 30.66. Sorry, that's 19 pennies. That is very, very low. That's a big miss. Sorry, here, hold on. I have to multiply by, I have to annualize. Hold on. Multiply by 12 to annualize. That gets you about a 7.4%. So this is a really low reading on the top line and about a 7.4%. I mean, this is one of the probably more worst case scenarios for the Fed, because it's kind of like, well, the pricing is going up for jobs, but we're still not getting a lot of jobs. This is a big oopsies. That's not good. Not expected at all. 194. This is like terribly low. Let's see. Unemployment rate fell. I'm surprised it went down to 4.8% with this horribly low number. But anyway, however, their levels remain above. Okay, among the major worker groups, the adult men had a rate of 4.9%. Adult women 4.2. Whites 4.2. Blacks 4.9. Asians 4.2, Hispanics 6.3, teenagers 11.5. We've got let's see, among the unemployed, the number of permanent job losers declined by 236. Let's see, temporary layoff changed little, so less people showed up in the report. Labor force participation rate came in at 61.6. Tiny has remained within a range since June. Okay, so no real change here. And let's see the individual groups. How are individual groups changed? Leisure and hospitality increased by 74,000. Wow, that's a big boost in the sector here. Arts and entertainment, recreation up 43,000. Food, services, and drinking places changed little in the second month. Professional and business services added 60,000 jobs. So services, entertainment, leisure, this we would expect this. This is good. September employment in retail rose by 56,000. I mean, these look like good numbers. Where did we lose all the jobs? Warehousing up 47,000. We've got employment and transportation. That was 47,000. Information industry, 32,000. Social assistance added 30,000 jobs. Manufacturing, 26,000. Construction employment up 22K. Wholesale trade up 17K. Here we go. Government education. Employment decreased by 144,000 in local government education and by 17,000 in government education and 19,000 in private education. Most back-to-school hiring typically occurs in September, but hiring this September was lower than usual, resulting in a decline in the seasonal adjustments. Wow. And healthcare slightly down. So schools and healthcare. I don't know. This is just a oddball report. Market somewhat rotating down on this. Gosh, this is not expected at all to have such a this was one of, in my opinion, one of the more rare outcomes, that we would end up having wages and wage pricing growth actually go up. So seeing a little bit more inflation, right? 7.4% annualized, and a lower top line read, because this is such a mixed signal for the Fed. I think people were really waiting for like 250, 300, 400,000 jobs to sort of put the nail in the coffin for the Fed to go, oh yeah, we're tapering. This is not so good. 194 sends the signal of don't taper yet, Fed. But at the same time, the wage growth was higher, so a little bit more wage inflation, and that sends the signal of Fed, yes, please taper. So you really got this disastrous kind of report, in my opinion, for the Fed, where the Fed's probably like, oh my gosh, like can we just for once get like a clear signal in terms of what's going on? I mean, I guess food prices and gas prices and commodity prices aren't enough for the Fed on that sense. But anyway, wow, I'm a little surprised. I'm curious to see what CNBC is saying about it, but this is a surprise to me.
To be asking as we listen to company management's report, which is, how are they handling the shortages?
Remember, by the way, the expectations were for 500,000 jobs, which I mean, it's just it's like a 300,000 job miss here. I want to quickly see BTC as well. Hold on, let's see here. BTC did basically nothing. Virtually no reaction here in Bitcoin after the jobs report, and the S&P 500 brief trade to the downside here. Slight bounce now. That is such an oddball report. You still have the indices broadly up at the moment. Yeah, I don't know that anybody really knows what to make of this. I think it's maybe if there could be any optimism in the markets, it's that this is probably a sign the Fed's look. It's not a nail in the coffin to the Fed where it's like that's it, we're tapering, right? And I think that's probably where markets are going to be more happy than disappointed, but definitely still confused. So I'd say confused optimism. That's how I put this. This is confused optimism over what's to come here. So confused optimism meaning, hey, maybe we'll still have cheap money flowing for a little bit longer, maybe until next year. But and that might be exactly the sort of movement that we're seeing here in the stock market. Tesla rotating up slightly here. You can see the S&P 500 stocks, rotating up. Disney rotating down. Amazon, I mean, you're barely seeing movements here. You really have to look at these candlesticks hard to see any kind of movement after that jobs report. Yeah, even Macy's had a little bit more red, but all right. I don't know. It's weird. Let's listen in over here for a moment.
And we see hires, but there are 10 to 15 steps in between a job posting and a hire. And at each step along that way, there's a bottleneck. And there is a huge logistics problem underway in the labor market. When I was at the CFTC, we studied the market microstructure of the financial markets in infinitum. We were very detailed, but no one really has that approach to the labor market logistics problem. How do we get people back into the market? What are the logistics? Is it really a labor shortage or is it a skill shortage? Where is it geographically? And I think more attention needs to pay on that. And I'm really dismayed, I have to say, by leisure and hospitality because it has been leading jobs growth. If it's not showing up in these numbers in the labor market, then it really dampens the outlook for the jobs recovery going forward.
Austin, are you convinced that
it's a good point with the skill shortage? A lot of folks have suggested that could be a possibility, including Federal Reserve Chairman Jerome Powell. Take a look at this here. This is SHIB right here. Shiba Inu all of a sudden taking off right around 5 a.m. here from about a 22, to a position of around 22. We'll call it 2,200 here. And right after the jobs report pushing to about 2,600. And bobbing around now. Well, actually, it's still on a nice uptrend here, so we'll keep an eye on this. Gosh, what a very, very confusing morning. No clarity, but if anything, probably leans in favor of less likelihood of taper than more. Yeah. All right. Well, there you go. So, all right, let's see what else is going on. Let's again hop back on over here to CNBC. Just see some other commentary here.
If people can't go out and spend, what you saw in the pandemic is periods like that are tough for the economy. So let's hope that this downturn in the number of cases is going to persist and we can get back under control.
But the other big question is, employers obviously paying more than they were before. How much more are they going to have to pay to get people back in the workforce? I mean, I think that's the real question. And that's what most business leaders who are watching this morning thinking to themselves, how am I going to get enough people to actually, come back to work?
Yes. Look, I think that some of that is going to be related to the conditions.
Right.
Yeah. Look, some of that's related to the conditions of the virus. You've seen, especially in industries where you're exposed face to face to customers or you're working very closely with neighboring workers. Those are the last place that people want to come back. They say, I'm not going back to work at minimum wage in an environment where I could get sick. So maybe if we improve on the virus, we can improve on that. But the second, you see that most of the conventional explanations, like the people who were saying, oh, it's all coming from UI, they don't really work. And when they get rid of the bonus UI payments, you don't see a big flowing back in of the labor force. So I think it's going to be a tough period. Broadly defined, we're having logistical problems. where your workforce is just like suppliers of computer chips and other materials.
Hey, Sarah, we're watching.
It's a really good point. For those just now joining, I'm going to give a quick little recap here on what just came out on the jobs report. I do want to mention that if you have not gotten your free up to $70 yet with Public, go to mettkevin.com/public, get up to $70 in free stocks. And of course, check out the programs linked below on Building Your Wealth. So let's do a quick recap here on the jobs report for those just joining. So quick recap on the jobs report. Jobs came in at $194,000. $194,000. I don't know why I always say it. Like, I'm so tempted to reference everything in dollars. So let me try again. Quick recap here on the jobs report. We came in with 194,000 jobs, which is a big miss compared to the 500,000 jobs that we were expecting. We did have the payroll numbers, the unemployment report, go down to 4.8% from 5.2. This was mostly because of seasonal adjustments, including a large decline in the unemployment figures for or the employment figures for private schooling and government schooling. A lot less hiring here than expected, leading to a negative number, sort of a drawdown, holding down the jobs report. But either way, no matter where the jobs came from or didn't come from, 194,000 jobs is way less than expected. The average hourly earnings went up 19 cents. That's more than the 17 cents they went up last month. And that works out to about a 7.4% annualized rate of inflation. So this means we're in a situation where we had less jobs than expected, which would be a signal to not taper, but a little bit more inflation than expected on job wages, which is a signal potentially to taper. But this definitely puts the Federal Reserve in a very difficult spot. There is commentary suggesting that this is maybe not a labor shortage situation. This is a skill shortage situation where people have to essentially retool their skills to get appropriately hired by companies. There are arguments that, and this is an argument the Fed has made, there are arguments that maybe it wasn't that we had a Federal Reserve unemployment boost of $300 a month that kept people at home. It was such a common thing. We'd constantly hear it, specifically from folks on the right in the media, that, oh, well, of course people aren't going to go back to work. We're paying them not to work. Well, now we're no longer paying people not to work, with the exception of state unemployment benefits. And we're not really seeing those large wage gains or employment gains. We're missing on these estimates over and over and over again. And so now it does send a very unclear message to the Federal Reserve. And the Fed's probably sitting there like this right now, going, what do we do now? I mean, quite frankly, I'd be confused if I were on the Fed, because you've got this horribly unclear report. It'd be nice if we just had a report that's like, hey, look, we're overheating, taper. Hey, we're not overheating, don't taper. I mean, and this report does say we're not overheating, but it does say that inflation is still lasting longer and staying around in a larger form than expected. So, and then now it matters, you've got this Fed dual mandate, stable prices, aka inflation, and you have a jobs mandate, a maximum employment mandate. And so that's the Fed's dual mandate. And so the Fed now in November is going to have to pick. Do we, or maybe they do some sort of gradient, right? They could do no taper, they could do the taper, or they could do something in between, like, hey, we were going to taper harder, but now we're thinking we're not going to finish tapering maybe until the end of 2022. We're going to push everything back a little bit because we're not seeing that employment recovery. Either way, the reaction we're getting in the market is mixed and confused. If anything, it's maybe slightly to the upside because there's more of a chance of less tapering, or like I said, a slower tapering or no taper, but no clear movement to either side. This is a very confusing report. Wish we had some more clarity, but we don't. Bitcoin mostly flat afterwards. The cryptocurrencies generally flat after the report. You've got mostly flatness in the indices, although most indices up about 0.25%. The only cryptocurrency that's really moving, at least that we're tracking here, is SHIB. This right here is where the jobs report was. It was already on an uptrend. Took a little breather here as the jobs report came out. And then when it came out with a miss, we really started seeing a movement here on SHIB again, going from just about 2,200 to about 2,700 right now, obviously in the massive decimals here, but a nice momentum mover right here. So that gives you a recap on what just happened with the jobs report. And so with that said, get up to $70 for free with public.com by going to betkevin.com/public. Get up to $70 in free stocks and check out the programs down below on Building Your Wealth. Use that Diamond Hands coupon code. I don't actually have the Diamond Hands cup today, but I have a level 99 fire making cup. So it says the same thing. Use the coupon code link down below. All right. Let's keep going. So now that's our recap. I don't know. It's just oddball and confusing. But we'll take it because it is what it is. All right. I will pull up the terminal as well just to see what Bloomberg has to say about it. I imagine very similar confusion. Let's listen in over here.
A seasonal driver because of education. We need to reflect on what is keeping people out of this market. And I don't think it's just a wage story either. There's something else going on.
Hey, Kate, really quickly, your reflections, your takeaway for investors, what they should think after this number, if there's any clarity here.
Yeah, look, I'm going to echo something that Sarah was just saying, which is around, less pressure on rates and less pressure on multiples, especially in tech and some of the growthier areas, being quite supportive for those sectors of the market. I do want to say we are expecting a lot more volatility throughout the course of the fourth quarter, though. We're going to get a print on payrolls. It doesn't quite meet expectations. We're going to get some Fed speak. We'll get some disappointing earnings, maybe beats on earnings. It's going to be a lot of back and forth, and there's a lot of uncertainty, and I'd say not a lot of conviction in the equity market right now. So I'd say buckle your seatbelt and take advantage of opportunities when we have down days to add to the high conviction secular growers with good free cash flow. That's my call.
Thank you very much, Kate. I want to thank our entire panel, Sarah, Austin, Neela, Kate, and Steve. And by the way, don't miss much more on the jobs report later today and a closing bell interview exclusive with the White House Council of Economic Advisors chair.
Yeah. All right. So I don't know. I mean, you had some people here say, oh, maybe this is going to be good for growth stocks and tech stocks. I mean, it's not bad, but I don't think the market necessarily agrees that this is a clear-cut catalyst. I mean, Tesla's relatively flat here. Adobe relatively flat since the report here. Google, let's say Google again. Google, Amazon. Quite frankly, they're all flat. So I mean, yeah. Honestly, like, I think if we would have had a miss on that inflation rate, we would have probably seen a little bit more of a rally because it would have been a clear signal. If we had a little bit more on jobs, could have had just a report along expectations, but nope. And nothing in this market is going to be what you expect. That's what I think. We think we're all realizing here is everybody's wrong. Just like literally nobody could be right. It's the inflation buffs who are like, we're going back to hyperinflation. They're wrong. It's the people who are like, there's no inflation. They're wrong. Like literally everyone's wrong. It's you can't be right. You cannot be right in this market. It's just kind of just like, just sit here and put your face in your hands and then basically just say, hey, you know what? I'm just going to keep buying the dip. I don't know. I mean, I'll take it. I'll take it because it is what it is. I have no choice, but it's very odd. So, all right. Well, we'll see how things open up. We've got about 40 minutes to go before the market actually opens here, and we'll keep track of this. So most specifically, we're gonna pull up Bloomberg here in just a moment and see what kind of commentary we got from them. Which, let's see here. All right. Take a peek here. Okay. I'm gonna watch Sheep. Yeah, Sheep moving nicely actually here too. And they've had a rough lot. I mean, yesterday was kind of rough for them. I think it's just sort of a lack of overall catalyst. It's hurting this cheap trend. Always remember that you want to look at trends when you're searching or when you're investing in a trendy stock, which I mean should make sense. But let's take a quick look. Trends.google.com. Let's see what we got here. Shiba Inu. We still haven't gone up past the previous peak here on SHIB. Yeah, it's just not ideal. Like yesterday, we had an evaporation of search trends for SHIB, and it really hasn't come back. Hold on, let me move my head here. 1 sec. There we go. So look at this above my head here. You really started having this decline in search trends for SHIB around 6 a.m. yesterday morning, so right before the market opened, California time here. And you haven't really seen a recovery in the trend. It's really been a bleed out here on trend, which is not good. And in my opinion, it kind of explains this rotation to the downside. You did have some announcements and catalysts yesterday about potentially burning, but which is good, making SHIB actually deflationary. We'll probably do a separate video on that, but still, I mean, it still wasn't enough to actually get any sort of search catalyst here moving. All right, let's go back here. AMC. Let's look at the SPY. SPY it's just completely flat. All right, let's see what the term says. Sometimes they could give us some special insights. Sometimes they just tell us the same thing that we already thought or knew. But it's always worth checking. All right, so dollar extending lower. Yields say why we should remain skeptical. Let's see. How are yields? Curve is steeper. Okay, well, that's between the 5 and the 30. Let's see here. 10-year treasury. Let's see how the 10-year moved. 10-year, I mean, 1.58. I don't know that we really had a movement here on it. Let's see here. No real movement. Virtually no movement on the 10-year treasury rates from the jobs report. Oh, what a disaster. All right. Dollar falls to session low. Futures and yields slip after payrolls. Well, I mean, they've kind of just been flat. Yeah, nothing. Like, honestly, they have no idea either. I feel like this is like one of the most unsatisfying jobs reports because it's literally just like, what? Oh well, what are you gonna do? I don't know. Maybe look for losers and pick something to YOLO. Yeah, because that makes sense. We might do that. Let me listen again a moment. Oh, see, they're talking about average hourly earnings. Let's listen to this.
See in a few minutes, and we want to remind you about the new scene.
No, they're not. They actually just had a banner at the bottom showing the larger increase than expected. But that's what I was hitting on as well. Is that I mean, that was y'all know those were the top two things we were going to look for, and geez, it's just not ideal. But okay, let's go ahead and see. Let's just get over it. Get over it, Kevin. Well, we're gonna figure this out. Oh my gosh, Owlet all of a sudden down 8.47%. That's not good. That's definitely going in the wrong direction. So let's see what happened here with Owlet, if there's any particular news. So let's see. Owlet 8%. After the falls, I mean, it went down to $4, then it ran back up, came up about 10 to 15%. And now has clearly started rotating back down. So let's try to figure out what's going on here. Let's see. Outlet to report third quarter results November 10th. Well, that's in a month. I mean, so far I don't actually see anything new here. We've got there's really no news here on Outlet. Nothing new on Outlet that would signify why it would be down 8.4% here. And then you've got a firm down 1.87. That's not such a big deal here. Faraday Futures, Meta Material, Lowe's, Home Depot. Yeah. Lemonade 0.66% to the downside. I mean, minor little dips here, but this is boring. Let's go look at the upside. Camber Energy still trying to run back to where it was. Back to $2.29. Incredible. Incredible. That's a good one, Max. Max says when you move to a new place, you should always get a good speaker. Just some sound advice. Punny. All right. Yeah. Jeez. Yeah, puts to sell. That would be interesting. Well, remember, I like selling puts on companies I want to own. And, like, I'd be curious to know what Neo puts are going for, even though it's a green day. And I generally don't prefer selling puts on a green day. If I go in here at $35, sell, let's see, it puts me at about, for November, what is that, 42 days or something like that? That's going to hit me up about 6.54%. And, you know, I'm $1 away anyway from actually being in the, in the money on these. You're out of the money right now. You're not going to get this contract exercised at 35 unless we fell more and went in the money. So, 6, yeah. I like Neo. I think Neo is the perfect opportunity, really, to play the China trade. I don't as much love Alibaba. I think they have a lot more to prove with the Chinese government, Chinese Communist Party. Whereas Neo, I feel like is a little bit more of like the loved child, I should say. So anyway, yeah. All right. We could try some others here. Okay. Let's see. So what else? Dutch Bros. Dutch Bros been on a slow move back to the upside. Okay. Let's see here. Blank 1.92, Matterport 1.11. Matterport 20%. I mean $20. I was really hoping to see a lower number. We got to about 1760 on the downtrend, but definitely being propped up by some more hodlers. Still got Shift Technologies at 690. This would be interesting. And I want to make sure that I take a look at this properly here. Let me see here. So, let's see here. Let's look at some 750 or 5. See, we're right between here. Okay, let's go over here. These are in. You get $1 on 750 for November. On a 750 strike, you get $1. $1 divided by 7.5. It's going to give me about 13%. You're in the money. I want to make that clear because I think I may have misdescribed earlier. In the money, out of the money when you're looking at puts. Yeah, doesn't want to even give me any data now. Come on, Shift. You don't have a lot of options trading going on over here. No data all of a sudden for November. It just had it. Whatever. Let's try to get that to load again. There we go. Okay, so in the money, out of the money. Above is in on puts. So let's go. This was the 7.5. 7.5. Sell. Yeah, you get $1. If you go to here, you're gonna get nothing. Okay. I'd be tempted by some Shift. I mean, you'd really have to want to buy it. But you'd get $1. It'd really be buying it for like 650, which right now it's at 684. Or you could just buy the shares at 684. 34-cent difference here. I don't know how exciting that is. What about playing some losers. Let's see here. Oh, I wonder if the outlet thing was just an oopsies. That almost makes me think the outlet thing was a little bit of an oopsies because now it's not showing up anymore. I was going to say outlet being down, 8% or 9% on no news. That doesn't make sense. A firm. Let's see what a firm puts, if you do sell puts on a firm, what those actually look like. Let's see here. So a firm, we'll look at the historic volatility graph as well. So historic volatility rotating back down a little bit. You still have rotation coming down, I think, ahead of you for this 7th. Volatility hasn't moved down much, but you still have probably more down than up with the crazy days that we've had here. So if I go to November, let's say 19th, November 19th, and we're going to go over here at something like at the money over here. Let's go 135. Yeah, it's a buck away. Okay, so if I sell a put here, 1710, that's going to get me in at, what is that, about 117.5, 12%, 12%. That's not too bad for November. Sell some puts here. Volatility goes down, you'll benefit. Price goes down, you'll be buying. Get you some more exposure here. It is at a high, though. If I go into something like end phase, that might be a little more juicy. Let's go. Although volatility is way less on end phase, I don't think we're going to get the volatility on end phase to have anywhere near that kind of pricing. So if I go 1495 divided by 160, yeah, see, it's way less. And it's not as juicy. Well, that's because volatility has been so low. Although recently it's gone up a little bit. Yeah, that is interesting. Not as much as a firm. Okay. So, all right, we got 27 minutes to go until the market opens up. Let's go ahead and take a look at some news. Let's see what other topics we got going on. Lemonade sell puts. That could be interesting. Usually we do this a lot in the course member. Well, I shouldn't say a lot, but we do this, I would say certainly at least once a week where we go put shopping. And it's really good. I really like it. So if I go for a 65 here, sell put on a lemonade, I'm going to get $5.70 divided by 60, a little less than 10. That's for November. I'm surprised you're actually not getting more, but that gets you in at something like 59.30. Not bad. Yeah. All right. All right. So let's go to news. So news, second straight month of a miss. This is an interesting little cartoon here. Yeah. Okay, who's it gonna fall on? Who's gonna get crushed? Wall Street could get 4 Bitcoin future ETFs by the end of the month. Ooh, look at this. This is interesting. I find that very interesting. Futures ETFs. All right, let's take a look here. Wall Street could get 4 Bitcoin future ETFs. After years of waiting for a Bitcoin ETF, the crypto community may finally get as many as 4 products in a matter of weeks. This month, the SEC has once again to approve, reject, or delay a set of applications for ETFs based on the largest digital currency. This time around, they follow a format Gary Gensler has indicated could be received favorably by the regulator. They'll hold Bitcoin futures rather than the digital asset itself. It's all raising hopes in the $6.7 trillion ETF industry. Beyond that, after years of delays, the world's largest markets may finally be ready to join the party. But a futures ETF, that's interesting, as if that might be able to get it through. So beyond any particular mentions from the SEC, it seems like people are just making the assumption that the SEC is going to be more open to approving a futures ETF rather than an actual ETF for holding the underlying asset. Approving futures-based Bitcoin ETF seems like an easy way for the SEC and Gary Gensler to get a win in terms of appearing forward-thinking on crypto. I don't know if he's so worried about how he appears. Yeah, first ETF approval for Bitcoin in 2013, and it's just never gotten approved. The odds of approval in the next month are better than 50-50, but I would hardly be surprised if the SEC kicked this particular can down the road a few more times. Yeah, it's no news. Yeah, all right. All right. So what is she pumping again? Let's take a look. I see some comments here about she pumping. It went to 28. Yeah, went back to our support line over here. So this is a nice move here in SHEEB. I wonder what the catalyst was starting at 5 this morning. All right. What else? Let's see here. Okay. Futures fluctuate. Taliban, at least 100 dead, wounded in Afghan blast. It's terrible. Merck's COVID pill faces risk that virus could outsmart it. No way. I mean, that was one of the things that was so cool about the pill, was that it worked against all the variants. So I'm curious about this. Okay. All right, let's take a look at what it says then. Merck's COVID pill faces risk that virus could outsmart it. Merck's experimental pill for COVID-19 should be accompanied by other treatments as soon as they're available to cut the risk of drug resistance that would limit its effectiveness. Yeah, but isn't this like what they say about antibiotics, where it's like antibiotics over time, if you use them too much, they become less effective, or you end up getting like these super, problems or whatever, super, I don't know, what are they called? Super, not bacteria. There you go, super bacteria. Well, yet to be cleared by regulators, Merck's drug has been hailed as a potential breakthrough, as it could be relatively cheap and easy to make, doesn't require infusion, and has shown it reduces risk of hospitalization. That's right, by about 50%. Resistance occurs when viruses and bacteria evolve to blunt or defeat drugs. Yeah, like a super strain. Thanks for saying that. It is a constant concern for antivirals and antibiotics. Merck's pill would be no exception, despite optimism that it might be a new weapon. The thought that you could have an oral drug readily available that you could take as soon as you have a suspicion of infection is a huge step forward globally. It really is. It's really good. While this has always been a concern for anti-infectives, the likelihood that it will become a severe problem appears to be low. Okay, good. Course for the treatment is short, meaning that viruses get few chances to evolve into resistant forms. Another reason lies in the drug's mechanism of action. Errors are replicated until the virus is defunct. It's so cool. Like, how do you create this stuff, right? This drug works by introducing errors into the coronavirus's genetic material. The errors are then replicated until the virus is defunct. Gosh, that is so cool. Merck's analysis has shown that the errors introduced by the drugs are spread more or less randomly throughout the viral genome. That means the virus has fewer opportunities to develop. Nice. Attacking pathogens. Many drugs have been far more effective in the combination than when used on their own. Oh, in combination than when used on their own. Okay. Attack pathogens from several angles. Drug cocktail. All right. Got it. All right. Let's go on to the next one here. Okay, let's jump on over to New York's real estate tax breaks are now a rich kid loophole. Tell us more. If you have a modest income but lots of cash, New York City has an apartment ownership program that's right up your alley, even if it wasn't meant for you at all. I see. Okay, so some kind of tax exemption probably for poor apartments. And no, this doesn't really apply to most people here, so we're gonna go to something else. That's interesting. All right, 20 minutes to go. Primers and protein binding with altered enzymes cause those effects. Primers and protein binding with altered enzymes cause those effects. Huh. So basically, introducing a set of enzymes lead to that, essentially the DNA replication process going kaput. Fascinating. So enzymes are, you can make these things, enzymes and proteins, right? Isn't that some of the new science now, that you can make enzymes and proteins in like vats, and then I guess you just stick them into a pill and make people swallow it. I don't know. That's weird, but I guess the enzyme and protein has to only affect that, though. It's just so weird. It's also weird that, well, then again, I guess when you eat something, your small intestines pick that stuff up and it goes into your blood. So I guess that is how you would get it there. I don't know. That's interesting. All right. All right, let's see here. Allstate wants to track your driving to set rates. Yeah, I mean, that's pretty much what Tesla does with Tesla insurance. Don't worry about enzymes. Smile Direct is about to moon. Yeah. Let's see. Exit plan for Sheeb. You know, I already exited Sheeb at a higher price than this. I would, but I'm thinking about, you know, it depends on what catalysts are. The trends were just too soft. Yesterday's trends were way too soft. You know, really, to keep going on momentum, you need trends. This is good right now, but looking for playing this with catalysts. Is it the right time to sell your home? Seller's guide. Boring. Tesla to move headquarters. Talked about that. Talked about what Elon Musk said. You got blocked from Binance in the UK. Yeah, I think they were shutting down Binance as of a few months ago. They announced that. Samsung expects a 28% rise in operating profit. Wow. Okay, let's take a look at that. Yeah, and then let's look at the sticks again. So Samsung is forecasting a 28% jump in third quarter operating profit. Wow. Raising prices now, are we? Of course. It's all that inflation. I mean, hey, we know about raising prices. The price of the course keeps going up. Samsung is due to report full earnings later this month. Bellwether for tech world because it makes major electronics while serving as a component supplier to companies like Apple. Chip industry, major investment spree. Intel's building new facilities in Europe. Intel said it would build new chip making facilities in Europe valued at $95 billion. Oh my gosh. And Taiwan Semiconductor Manufacturing has said it would spend a record $100 billion over the next 3 years to increase productive capacity. My goodness. Yeah. All right, well, we'll see. All right, let's look at the sticks a little bit here. So, sticks, pre-market, Rocket Lab, down 9.4. Smile Direct, down 288. Affirm, down about 1%. Home Depot, also down about 0.83. Toast, down about 1/3. Lucid, Lemonade, down about a tenth of 1%. And Camber Energy and Sundial trying to make a recovery here. Wow. Sundial's at 64 cents, now at 73 cents. Shift Technologies moved up to about $7. Really think Shift is a way to play the supply shortage. So when that supply shortage abates, I wonder if then it's finally time for some of these things to kick off. I wanted to wake up to massive red. Yeah, sorry, we got literally nothing. We got clickbaited. 10-year Treasury at 1.57. Jeez. Stock futures. I mean, Nasdaq's up about half. The Nasdaq is celebrating this more than the others. NASDAQ Technologies, S&P more so than the Dow. Struggling student loan borrowers may miss out on big part of the child tax credit. Stock futures bounce after disappointing jobs report. Badly misses expectations again. Credit euphoria will drive banks to booming profits. Ooh. Most big companies totally support vax mandate. Okay. Yeah, wow. I mean, just low news. Wow. Cynthia Loomis discloses a Bitcoin purchase worth up to 100K. Really? Look at that. The spokesperson at Loomis's office says there was a delay in the filing due to a filing error. Okay. She made her first purchase of Bitcoin in 2013 for $330 a token. That's awesome. Sizable Bitcoin purchase. Crypto supporter continued to grow her stake. Oh, I love it. No, let's see if we can. Is this it? No, that's the requirement. I want to see the Senate financial disclosures. I want to see the actual report. Public disclosures. Let's see. Let's see here. No. Senate financial disclosure. Financial disclosures. This should be an easy way for us to search for this. Resources. Oh, come on. Database. Maybe in here. Oh. This looks good. I think we're going somewhere here. Ah, here we go. Loomis. Aha. Ooh, here it is. Let's take a look. Isn't Shift concerning during inflation as it would cost them more to buy cars and resell? Yeah. The idea of buying Shift, it's horrible right now. It's horrible for Shift right now. The idea is that when the inflationary issues and the supply shortage abate, maybe the company stock price will go up. That's it. Self, Bitcoin, crypto purchase. Oops. That's it. It's just literally the one-liner here. Cryptocurrency, asset name, Bitcoin, exchange platform, River. What platform is that? River, Bitcoin purchase. River Financial. Huh. Okay. Talk to a human. Bitcoin is our focus. Buy $10 to $1 million of Bitcoin in minutes. Sign up, link your bank account, buy Bitcoin. Okay. So yeah, and that's pretty cool. Let's see if Senator Elizabeth Warren has any Bitcoin. I don't think so. I've gone through her reports before. She also hasn't really filed anything for a while. Last thing was in May. You got a filing over here. Which there's something interesting to note. Let's see here. Yeah, take a look at this. Okay, let me see if I can find it really quick. Because Elizabeth Warren just went off on Jerome. Elizabeth Warren, Jerome Powell. Let's see here. Hold on a sec. 2 days ago. Yeah. It's in this. All right. You want to see something funny? I think it's this one. Hold on a sec. Let me see. It might not be. I'm trying to find out. It's also very disliked.
Officials. This comes after Warren.
It didn't happen with one big step, with one explosion. No, it was just a little bit and a little bit more.
Calling of a dangerous man for a man that acted pretty swiftly and pretty in a huge way and creatively to protect our economy and our system from a global financial crisis during COVID-19.
I don't know if it's in this. I'm trying to find. He's loading up on Risk now. I feel like this interview was longer, but they didn't actually post the whole thing. I wanted to see there was a part of where she talks. Oh, maybe it is at the beginning here. These transactions. It might be around here because there's an irony that I want you to see. Hold on a
To look
second.
into these transactions, it's joins us. Comments which made a ton of news and got a lot of attention. I understand you're dangerous, man. Isn't it just unnecessary smearing instead of having an honest conversation about the issue?
Go, Sarah.
I've been having a conversation about a little bit and a little bit more and a little bit more until those jobs.
Now I can't find it. Darn. Okay, well, I'll have to look harder for it because Elizabeth Warren totally slams the Fed for something that she really shouldn't be slamming them for, and I'd love to talk about it, but unfortunately, finding the clip might be a little bit harder than I thought it would be. 2 days ago, I found it. Oh, this is good. Okay, the market opens in about 9 minutes, so we got plenty of time. Okay, you ready for this? This is good. Oh, yes. Yes. Okay. Okay. Oh, this is so funny. All right. Give me 1 second. Let me just set this up. And get rid of that. Okay. So take a look at this because this is something else. All right. So what I'm about to show you is what Elizabeth Warren says in her complaints about the Federal Reserve and some trading that happened at the Federal Reserve. But then I want to show you something about Elizabeth Warren's financials. So take a brief listen to this. So it's about a minute.
I am concerned about a culture of corruption. When we find out that there have been 3 different high officials at the Federal Reserve who have engaged in practices that may be a violation of law, but certainly undermine the public's confidence about whether they are acting to line their own pockets or on behalf of the American people, that's a real problem. And it's a real problem in leadership. We need a leader who makes it clear. I mean, this actually shouldn't have been an issue. Who could be at the Federal Reserve in a position of authority and responsibility and think that it is okay to trade individual stocks or to move from a bond portfolio to a stock portfolio the day before there is a major announcement about possible changes in Fed?
Okay, so fair. In some regard, there's some fairness in what she's saying. You had 3 people, Rosengren, Kaplan, and Clarita, trade stocks during some of the craziness of 2020, and Clarita moved money from a bond fund, $1 to $5 million from a bond fund to a stock fund. It is true. The day before there was a big Federal Reserve announcement. This is true, and it is kind of like, oh, wait a minute, that's a little shady, that's a little sus. Like we shouldn't be seeing that. Now, usually Elizabeth Warren is quite the buy the dipper, which I think is cool. Like I went through her prior reports, and I think it's useful to look when you go into her, for example, 2020 report. They just buy the dip. It's her and her husband. And if you scroll down to her financial disclosures, she regularly kind of buys the dip. See, here's her 2019, which was filed in 2020. And you get a lot of usually purchases here. So you get some sales listed up top, but most of them are purchases of between $1,000 to $15,000. And it's all in these TIAA funds that she buys. And she's constantly buying the dip. And it's just $1,000 to $15,000, which could be like 10K, 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 5K, whatever. But most of the time she's buying the dip. She did a lot of that in 2020 as well during the financial crisis. So you saw a lot more purchases than even sales. So quite the buy the dip. I mean, here, February 20th, bought the dip, or maybe there wasn't maybe necessarily even a dip there. It's just that same $1,000 to $15,000. I don't know that she even really cares about buying the dip. I think it's just this sort of regular buying. Around March bought, in April bought, in May bought, in June bought, and so in July bought, in August bought. Doesn't really care. It just seems like whatever, putting our money into here. In this case, it was the Vanguard total stock market. So she's buying index funds, which in fairness, hey, that's not trading individual stocks. but she did just bag on one of the Federal Reserve members for going from a bond fund to a stock fund. In fairness, that Federal Reserve member went from a stock fund from a bond fund to a stock fund the day before an announcement. But I have to say, I did think it was very interesting that she would use that example when she also, let me see if I can find it here. Take a look at this. On September 9th, and I don't know if this was right before Catalyst or anything. Maybe not. Maybe it was. Maybe it wasn't. But it's kind of interesting that in 2020, Elizabeth Warren also sold a bond fund and moved it into a stock fund. So, like, for what it's worth, she kind of did the same thing. Again, maybe not right before a Catalyst, but kind of did go from a bond fund to a stock fund. So, who knows? Maybe this is a sign that it's just like either everybody in politics should be banned from trading, or nobody should be. But I kind of I'm like, wait a minute. What was happening in September in Congress to make you go from a bond fund to a stock fund yourself? So I don't know. I think that's a little odd. And note, this is different from her regular buying, right? Because I do appreciate that she's constantly doing this 1 to 15,000 buying here, but this is different because you have this larger, this 50,000 to 100,000 move from a bond fund to a stock fund. You did also, I believe, have a transition over here from a type of index fund to a Vanguard. So she took her fund money from TIAA worth between $1 million and $5 million and went to Vanguard. That also happened on the same day. So she did do a transition from a stock fund to a stock fund on that particular day. That's not such a big deal, but seeing the transition from a bond to a stock fund, but then also bagging on somebody else for doing that sort of transition. Again, maybe in fairness because of the catalyst, but she did also make that transition that year. And I don't know, I mean, what was going on in Congress last September? Last September, we were negotiating. I mean, we didn't pass the $600 stimulus check until December. This was right before the budget crisis, right? Let me see. 2020 budget debate Congress. Do a quick look here. It would be the 2021 budget debate, I suppose. August 9/14. What budget? Okay. Whatever. We got a stock market to look at. But anyway, I just thought I'd make that mention that, it's not like Elizabeth Warren is not making trades either. Who knows? Again, maybe not right in front or right before a particular catalyst like the Fed did. But I just specifically thought it was interesting how she would choose to say, how could you go from a bond fund to a stock fund? Again, right before a catalyst. But she did also make that sort of transition. Again, maybe the timing different, but maybe she took inspiration. Anyway, let's get to what the market's doing. All right. Do as I say, not as I do, right? All right. So what do we got going on here? So let's see here. We have Sundial up 13.49% and Camber Energy trying to make its moves here as well. We have 30 seconds to the opening bell. Let's go ahead and look at the S&P 500. S&P sitting at pretty flat. 0.2% to the upside. I mean, boring. Blue Apron's going down a little bit more, 4.18%. But beyond that, I mean, I'll put up here. Let's do this. Let's put up AMC and maybe we'll put up the SPY. But let's first look over here for the bell.
It's due to be carbon neutral. They are so, you know what they are? They're carbon positive. And do they get any heat from the Germans? They're carbon positive. No, because I want to sell Mercedes-Benz there.
I can't really hear a word Jim's saying, but you could just hear like his intonation. Oh, it's kind of funny. So looks like we're about 70% green today. Let's go see how things are actually opening here. Looks like AMC starting on its sort of continued downtrend here, starting the day on this. S&P 500 is literally doing nothing. Boring. Not boring enough, though, for you not to get your $70 or up to $70 with Public by going to metkevin.com/public. And not boring enough for you not to check out the programs on building your wealth on programs like the Psychology of Money or investing in real estate, invest in your own property management or rental renovations, being an agent or making YouTube videos. Check that out down below. Hippo coming back to life a little bit, 1.3% or 1.13% here. Upstart 310. Nice movement there on Upstart. Very nice. AMC kind of still rotating down here. Tesla moving down a little bit, but it's still at like 795. Does that mean it's green on the day? Hold on, let's see here. Tesla, yeah, I mean barely. It's 0.07 green. Just can't get over 800. It's a big resistance there. Sheep sitting at 2600-ish here. Rocket Lab, DD, Toast, couple percent here or there. First Majestic 5. Camber's still trying to move. Looks like Camber is moving a little bit more in the pre-market. Yeah, turning a little bit red right now. Let's go back to single chart. Sometimes a little hard to see when you've got the double chart up. All right, let's see here. For the open, Alibaba. See, we are getting that recovery in the Chinese stocks, though. And this is now, what, the third or fourth day in a row here. Alibaba's up. Let's go to the day here. You'll see them bottom out at about 138. Yeah, it's about the second day now in a row here of some nice recovery on Alibaba. And I've been playing NEO for my Chinese trade. You've been seeing that same kind of 2-day rotation up here. And where's NEO sitting right now? Let's go take a peek. NEO right now, if we sort by name, should be right here. NEO is up about 0.5%, sitting at 36.14 right now. Yeah, Baba rotating up a little bit more. Alibaba coming up about 2.6%. So Alibaba actually moving more so than the electric vehicle company NEO today. Li Auto slightly red, 1.46 to the red side, and XPeng, ticker XPEV, pretty much flat. Okay. Other movers here. Let's see here. Upstart 2.23, Spotify 1.53, Palantir 1.28, Airbnb back to 171. Was trending back down to the lows of IPO, but didn't quite make it there. SoFi up 0.77, Square coming back up over 250 now. American Express, Vuzi, GameStop 0.5%. Twitter wins somewhere around 0.5% there. How's Wayfair doing? Flat? Pretty much flat. Let's see here. Had it loaded. There it is. Oh no, it's 1.29% to the upside again. Good. I sold some puts pretty much at the bottom here a couple days ago. And it's like very, very slowly started going up again. So we'll see what happens. Yeah, Rocket Lab, the leading stocks down. Dave & Buster's, a few days now of red. What, 2 or 3 days here? Hard to tell on the average candlesticks. Let's change that. Let's go to our normal candles here. Yeah, a couple days now of red. Second day in a row here of red. Certainly not anywhere near the lows where we were around $30. That was a steal over here. Was it Delta Fears? Yeah, this was Delta Fear time. So let's see here. Okay. Delta Fear. Delta Fear is gone. All right, let's look at some of the headlines. So there's not much changing here in stocks. I mean, this jobs report, hey, you know what it is, though, is it's a catalyst remover again. A negative catalyst has once again been removed from the stock market. We literally, in my opinion, we have one catalyst left. I just want to grab you and shake you in terms of the market, not necessarily you. And just like, market, where are the other catalysts? We've got one left, and it's inflation next Wednesday. Mark your calendar, 5:30 a.m. I'll be live early again. Inflation. That's it. That's all we got left. I mean, sure, then we're going to pass the infrastructure bills, probably end of October, early November. Big deal. This year is going to wrap up boring, which possibly is a very good thing. I'm very glad we bought the crap out of this dip the last 3 weeks when we were really hitting fear, but that's when we had all of the catalysts. I mean, I needed 2 hands to count the amount of negative catalysts we had. Now, we got nothing left. A CPI, that's it. This jobs report was a big whole lot of nothing. And here, picture this, folks. So negative catalysts gone. Right. I don't want to rehash them all, but just a quick example of what we had. We had unemployment, CPI, debt ceiling, budget, infrastructure, Evergrande. And then, maybe you can include Delta a little bit. A lot of these things have just completely evaporated. That's why we invested when there was so much fear, put a lot of money into the market. Now, now we might actually be facing this potential positive catalyst of, we were pretty much guaranteed expecting the Federal Reserve to taper in November. Now, get this, there's a chance of a positive, hey, we're going to wait until January. So the taper or the next Fed meeting actually has the potential of being a positive catalyst rather than a negative, because our baseline expectation is we start the taper in November. But this jobs report could potentially delay that, which would be a positive catalyst, especially for growth stocks. So it's either going to be neutral or it's going to be positive. That's like, you're setting up a best case scenario for the rest of the year. The big danger, though, would be CPI. If CPI on Wednesday comes in very bad and we get some kind of blowout inflation of like 6% or something crazy, that'll just take the cake. That'll definitely take the cake. And that'll reiterate the taper. That'll hurt the market. That's a severe one. But if it's benign, ad expectations are lower, then that's it. 2021 is going to be a wrap. And I think the year will end up pretty strong, unless, of course, we have that bad inflation reading. So, okay, Dave & Buster's falling nicely here, down 3.53%. Lemonade's also falling. If you want to get into InsurTech, now let's see if puts have gotten more juicy on this sell puts. I don't like shorting. I've only ever really gotten burned investing on shorting or leaps. Leaps and shorting. Those hurt. Otherwise, things have gone very well. Knock on wood. But anyway, yeah, this sell put pricing has just gotten a little bit more desirable. We're now over 10%. This pricing just went up about $1 per share. So that's nice. Yeah, some sell puts right here on LMND. This is November. This is a 42-day sell put. And what kind of collateral tie-up were you doing here? 100 times 10. That'd be $65K. If you bought one contract, you'd be tying up $6,500. So you're tying up about $6,500 per contract, but you're getting about 10% back. But then again, you are in the money right now, so you would be getting executed. If I go down to that's why you've had the dollar price. So we don't have options around $63. Yeah, that makes sense. But then this would be like buying the shares for $58.30. It's not bad. $58.30 right now. How's the SPY reacting? Let's take a look. S&P 500. That looks like it's dipping a bit. Yeah, look at that. Market is dipping a little bit here. People taking their money out for taxes. Oh, Tesla down 0.74. Nice rotation down here. Oh, we're actually having more things rotate down. Autodesk. How's Autodesk been on a trend here? Kind of flat after its sell down. Disney's rotating down as well. What did I get here? I got Disney. Yeah, weird. And now a little bit of a bounce. Just bizarre. Let's see. Lemonade. How's our upside? Let's take a look. Towards the upside, we've got Alibaba's still sitting at 2%. Zoom coming up a little bit. Wayfair, good. Wayfair, I like to see Wayfair up. Want to trade my sell puts. Etsy still green a little bit. Etsy's just been undeniable winner. Just keeps going and going and going. Kind of like Affirm, but I think Affirm's actually red today. No, it turned green. Oh my gosh, it's the stock you can't stop. Oh yeah. Okay. All right, let's look at some headlines. See what we got. If there's any kind of news coming through here. All right, let's see. All right. Jobs report, big miss. Canada almost added more jobs than we did. Ay. Okay, so we talked about the futures. Facebook's algorithms are too big to fix. That's a good one. Tycoon behind crisis era properties sits on, okay. Debt. Denmark's richest man pays 17,000 staff a month's wage and bonus. Aw, nice guy. Phones still suffering as abortions resume. All right, Wall Street. What do we got over here? Similar news. Okay. Well, let's hop on over maybe to the Econ or Financial Times. Let's see, Economist. What do we got over here? Facebook's nearing a point of reputational no return. China ratcheting up military presence. Let's see here. I like how this is their definition of Democrats. How's that? Look at all the donkeys yelling at each other, pointing in different directions. That's a good one. All right. Not much going on. Top. Really top news here. Yeah, U.S. jobs growth underwhelms. Got it. Fed under pressure. The ethics need to be as strong as the economics. Okay. Return of the renters. Price hikes and bidding wars. Ooh, this is interesting. We're going to look at this in a moment here. Let's close this out. Let me see if there's anything here. Troubled earnings session looms on COVID disruption. Yeah, earnings season does come up here. Earnings season, not session. Misread that. All right. Okay. So let's take a look at this here. What do we got? The Financial Times is now reporting this. Okay, one sec. All right. Financial Times is reporting the return of the renters, price hikes, bidding wars, and bribes. Now, this is in London, but I expect we can apply a lot of this to America as well. So some person here, Anya, just spent weeks searching for a house that her and 3 friends could rent. The 20-year-old charity research manager was looking for properties costing between £3,000 and £3,250 a month, but struggled to get bookings to see them. When she could get through the door, she found herself in group viewings with several other prospective tenants. Listing agents told us places were going under offer the same day they went online or were fully subscribed for viewings, something I've never heard of before. Decent period during the first lockdown in summer last year where rents were much lower. Landlords seemed to be struggling to rent out properties. That's true. That's true. You did have that quite a bit during 2020. UK capital slowly coming back to life. Underground and the city are the busiest they've ever been since March of 2020. Here's somebody, David Solomon, who called home working an aberration, says its London office can return to full capacity. It'd be a fun place to work, go to work in London. Well, it seems like it'd be fun. I think any big city would be fun, though. Before COVID restrictions were fully eased, the flood of flats, student digs, and former short lease rent properties meant opportunistic renters could pick them up on bargains. That's gone now as rents are going up. Demand for London rental properties in August was up almost 80% on the average for 2017 and 19. I think you're seeing that a lot of that throughout really the world. It's not just London or the United Kingdom. You're going to see this in New York as well. Here, rents on New York or in New York are on the rise as well. See, I figured they would talk about other cities as well. Yeah. New York's fun. San Francisco, among the few cities where rents remain below their pre-pandemic levels. Yeah, look at that. So San Francisco is still down 10% on rents, but almost everyone else, the exception of DC here, just fractionally below. Almost everybody else has actually gone back up. Chicago, Boston, New York. San Francisco is the one that's gotten hurt a little bit more. 10% below pre-pandemic levels. Huh. All right. Let's go back to the sticks. Anything else here on the sticks? Oh, look at Quantum. QuantumScape now up 5.6% here. I wonder if Quantum had some news. QuantumScape. Pull it out here. All right. Individual company news. So QuantumScape. Nope. No particular news. Actually, no news at all. So congratulations to QuantumScape for being up 5.7% on no news. Gevo up 3%, DD up 3.3%. Upwork still moving up 2.16%. Alibaba gave up a little bit, only 1.7% now. And Affirm continues its run. This is the stock I will never sell covered calls or sell calls on again to have covered calls. No. Stay away from those. Wayfair up 1%. Good. Yeah, Neo 0.88. Solar Edge fractionally. Wow, what a just sideways market here. CRISPR getting smoked. Down 4.92%. I wonder if there's news on CRISPR. Commerce Secretary on wages. Hold on a sec. Let's listen to this.
Hi, guys. Have a good weekend.
Oh, I missed it.
It's covered quite a bit of ground there. We got a little bit of optimism on supply chain.
Well, remember, she is a terrific business person. Venture capital before Rhode Island, breath of fresh air, true business person. I think that notion that the same analyst, the Union Pacific analyst said it's possible, would be so incredible. Because the port series that we just did, it just showed you that by Christmas time, we're not going to have what we need. I think that what she just said could be a major break. David, she knows whereof she speaks. She's totally hands-on. By the way, we're going to get these foundries done.
Well, it's interesting. She mentioned talking to Tim Cook and a number of other CEOs, and we are, but it's going to take years. This is not something that's happening next quarter.
No, we can get the equipment from Lam Research. We can get the equipment from ASM. We can get this.
We can build new foundries that quick. Yeah, but how many years is it going to take to build to actually increase chip capacity to a meaningful amount?
I will get this done.
Really?
You're going to open a foundry too?
You're going to have to stop making movies. That's not productive.
All right, let's pull off Kramer here. Take a look at this. This is interesting. CRISPR is selling at roughly the same level it sold for back in July, folks. In July of 2020. Not 2021, 2020. That's incredible. And look at this this blue line I drew here. You are at May 2021 lows, March lows, and now again visiting those lows, which were the highs of last summer. I mean, here's just a company that now, in fairness, in 2019 it was trading for $22. It took off to about $60 at the end of 19, and did very well in terms of recovery here going into through the pandemic. But boy, oh boy, what a disaster here. I mean, the thing ran up to 220 and it's at 98 now. Let me see here. Let's look at a financial analysis here on this one. So CRISPR, that is some weird data. What? How is it? They must have had some crazy one-time contract or something. They're expecting $901 million of revenue in 2021, but 58 million in 2022, 275 in 23, 246 in 24, 656 in 25. That is the most odd earnings trajectory. It must just be very lumpy the way they get revenue. That's what I would call that, lumpy revenue. That's ugh. Elon Musk's SpaceX hit $100 billion valuation after secondary share sale. Wow, man. $100 billion? I don't know. Why does that seem a little expensive to me? Gee whiz. People are excited to buy shares in the private market right now. Golly. You gotta be careful. You could easily overpay in the private market for a private equity right now. It's like people feel exclusive, so they just they overpay. Look at a firm, 2.3%. It just keeps going. Can't stop a firm. Can't stop, won't stop. Not before this holiday season. It's gonna keep going on a firm. Zillow 1%. Toast. Neo 0.75. Wayfair gave up a little bit, 0.67, still to the up. Enphase sitting around 1/3%. Boring movers today. Downside, Outlet, Lemonade, CRISPR, Very Good Foods, Matterport, Tilray, Cheesecake, AMC, Palantir, Hippo, Playboy, Delta. These guys all moving down about 1 to 3%. Tesla's almost at 1% to the downside. Take a look at the SPY. SPY sitting for the intraday period here. Mostly at almost at session lows. Almost. Let's see. Let's look for some other news here. Bloomberg. Let's see here. News. What is news? Stocks fluctuate. Yeah, that's boring. Payroll growth misses big. Yep, talked about that. Barclays rethinks macro trading desk for less volatile times. Yeah, that makes sense. It feels very unvolatile right now. Are we unvolatile or involatile? Probably unvolatile. Not volatile. Okay. No. Okay. Let's see other top stories. Aggressive mergers and acquisition. Brazil's inflation seen slowing after topping 10% in September. Oh, let's take a look at that for a moment. Should have red hair. Red hair, yeah. Volatile. Uh-huh. Brazil's consumer prices rose less than expected in September. Oh, well, that's good. Supporting the central bank's view that inflation peaked at just above 10% and will start to slow as rising borrowing costs cool down the economy. Inflation accelerated to 10.25% from a year ago, its fastest pace since February 2016, and 1.16% from a month prior. Economists expected a monthly increase of 1.25%, so they started getting a slowdown. Housing costs jumped 2.6%, and transport prices rose 1.8%. Those were the major contributors. Central bank has lifted borrowing costs 4.25% since March. However, rising energy bills due to severe drought and spiking commodity costs have pressured prices further. Still, you got an inflection point in Brazil's inflation. Wonder if we're going to get something like that over here. Apple's flat. CRISPR's getting worse. Just falling. Dave & Buster's kind of flattish. Yeah, Camber Energy not doing as strong as it was. It's really QuantumScape moving here. And Affirm now 3.35%. Jeez. Every time I look, it keeps going up. I got to stop looking. Wow. Intelia. Here's another one that's just gotten burned like more recently. And this was really after its explosion in June. I remember watching this explosion in June, just like, oh my gosh. I wonder if it'll ever go back down. And it's kind of been getting burned down here just in September, but obviously much higher than where it was. Lemonade. Let's see if options pricing has changed at all. 65. No, it looks like you got. Hold on. Sell put 680. A little bit better. Yeah, but that's again really only because the price went down about $1 or more. All right, time to make some more coffee. Folks, check out the programs linked down below on Building Your Wealth. You've never heard that pitch before. And here's another one. Get yourself up to $70 in free stocks by going to metkevin.com/public. Oh, and here's another one. Go to metkevin.com/life to get yourself life insurance in as little as 5 minutes, which you can Apple Pay or Entry Pay for. Never heard those before. See, new sponsorships today. All right, folks, I'm going to go now. Goodbye.